Hello, everyone. I hope everything is in order and you can hear and see me. Could you please type in plus or another sign into the chat so that we make sure that everything is working? Type something like a plus. Okay, good, good. As I can see, everything is working and the participant can see me and can hear me, which is great. Then let's start. Let's start our webinar on tax structuring of investments into Kazakhstan. And a few words about myself. My name is Viktor Kalgin, and I help clients to develop tax-efficient structures and help them to adapt these structures to ever-changing environments. So I'm a consultant working on cross-border structures. This is basically what I do. And today I'm also joined by a representative from Astana International Financial Center. His name is Temirlan Nildybayev, and you can probably see him as well. Temirlan, could you say a few words about yourself?
Sure. Good day, colleagues. I'm glad to see you all here. Welcome to our webinar. I hope that you can hear me well. Just please let me know that if you hear any noise or there are some problems with my connection, please just drop a message in our chat.
Yeah, we did experience some problems when we prepared to the webinar and made a few rehearsals, but everything seems to be working now, and I hope that no technical issues will arise as we go. So hopefully everything works well. And I'm really delighted that a representative from AIFC in Kazakhstan, in Astana, joins our discussion today. And in the next couple of hours, we'll be discussing how to structure investments in Kazakhstan and what new challenges and opportunities are, let's say, available to international investors. Before we move on and I tell you about the contents of this webinar, I would like to encourage you to participate, and you are welcome to ask your questions. We received a number of questions before the event, and we will, as we go, we will respond to the questions that we will receive. But you can always type in a question in a special tab. If you look at your screen on the right. On the upper right corner, there is a tab or sign called questions. You can type in your question there, and as we go, I will make pauses to respond to the questions as they occur. So let's make this event as interactive as we can, and it will be, yeah, I think most helpful to everybody if participants join in and ask questions. Okay, so. The webinar is going to take about 2 hours, and it will be divided into 4 sections. The first part will be about structuring of investments into Kazakhstan, and typical structures. We'll discuss what is to be taken care of and what should be what factors should be considered when structuring investments into Kazakhstan. That's the first part. The second part is going to be about tax reforms, which happens in Kazakhstan recently, and they affect international investors. We'll discuss those. Then we will discuss what opportunities are offered by AIFC to international investors, and Temirlan will lead there. And finally, in the final part, we'll answer questions. So this is the plan, and then let's move on and start from the first part. Usually, there is a number of factors that an international investor should consider when structuring investments overall and specifically in Kazakhstan. I would say there are 4 main areas, 4 key factors that should be taken care of. And on this slide, you see a structure where there is a parent company outside of Kazakhstan, and there is a subsidiary in Kazakhstan. And obviously, if the investment into subsidiary is successful, then at certain stage, the subsidiary is going to distribute dividends. And as in many other countries, dividends are taxable at source in Kazakhstan. And this is the first factor that each investor should consider when designing, when developing an investment structure. So there is withholding tax on dividends, and whenever you choose the location of the parent company, it is necessary to consider withholding tax implications for dividends, and we will talk about this in quite a detail. Well, basically in a few minutes. The second factor is capital gains, and again, in some countries, and Kazakhstan is not an exception, capital gains from sale of subsidiaries in a specific country are taxable, and depending on the structure, there may be different tax implications depending on the structure, how investments are structured. The third factor is loan financing. And again, interest payable on loans is subject to withholding tax in Kazakhstan, both on intra-group loans and external debt. So this is the third area. And finally, operating activities need to be structured properly. So these are the four main factors that international investors should consider when investing in a country. And we will, as we move on, we will discuss each of these four main factors and how they work, how these consequences apply specifically in Kazakhstan. So the first part, the first subsection of the first part will be about dividends. And let's look at the structure where dividends are paid from Kazakhstan to a foreign parent company. So first of all, as I said, there is withholding tax, and the domestic rate is 15%. Okay, so this is the domestic rates. Dividends are taxable in Kazakhstan at a rate of 15%. There is an increased rate applicable to investors from so-called blacklisted countries. So whenever the parent company is located in a so-called blacklisted jurisdiction, the dividends payable to this country are subject to an increased withholding tax rate. And those blacklisted countries, well, they include mostly commonly referred to as offshore countries, jurisdictions commonly referred to as offshore countries. So there is no surprise here, and countries which rarely have double tax treaties and usually have tax-free regimes, they are considered blacklisted in Kazakhstan, and the increased rate therefore applies. There was and still is until the end of the year a so-called 3-year exemption, where dividends for long-term investments were exempt from withholding tax in Kazakhstan, which was very favorable, and it is still applicable until the end of the year. And we'll discuss the tax reforms later on as we go, but this is one of the major changes for international investors, that the 3-year exemption is no longer an exemption now. It is still maintained, but now only a reduced rates instead of 15%, 10% rate can be applied after this year ends and the new changes come into force. There will be no exemption for dividend distributions unless there are specific other incentives or exemptions apply, but the most commonly used 3-year exemption is not applicable in Kazakhstan starting next year, but it is still in force, and many investors, except those who invest into subsoil uses, because it's also important to mention that this 3-year exemption was not applicable to companies that extract minerals and have subsoil licenses, but otherwise other businesses, they could benefit from this 3-year exemption. Let's consider an example with a Russian parent company, and I'm originally from Russia, and I work a lot with Russian clients, and there are participants from Russia in this webinar, and I decided to consider this a structure where Russian company invests into Kazakhstan and receives dividends. Basically, the 3-year exemption applies because Russia is not blacklisted. And then there is a treaty between Russia and Kazakhstan that allows to apply a reduced withholding tax rate of 10%. So the treaty between Russia and Kazakhstan reduces the 15% rate applicable to dividends to 10%. It's not the best treaty, and many treaties that Kazakhstan has, and we will discuss in a bit those treaties. Many treaties that Kazakhstan concluded with other countries, and there are 55 treaties that Kazakhstan concluded, they allow to apply a reduced rate of 5%. So the Russian treaty with Kazakhstan is not ideal. It's not the lowest rate, but it is what it is. Okay, so it's 10% with Russia, and obviously dividends are subject to tax in Russia, but there is participation exemption in Russia as it is in many other countries, and well, the conditions are 1-year holding periods and 50% participation, and those dividends that are paid to the Russian company will be exempt if these conditions are met. Okay, so the final, if the treaty applies, or if we have the 3-year exemption starting next year, the final rates will be 10% in this structure. Okay, let's look more broadly at other holding companies' locations, and there are. I listed a few countries that I commonly come across in structures, in international structures, and they are in more or less extent used to structure investments in Kazakhstan. For example, Cyprus. Cyprus is a very favorable location for Russian investors, and a few years ago, Kazakhstan concluded a treaty with Cyprus, and it is now looks good as a location for the holding company because there is a 5% withholding tax rate for dividends. Obviously, all dividends, and we will discuss it later, there are additional conditions to be met, such as beneficial ownership, sometimes participation threshold needs to be met, but overall, with Cyprus, 5% rate is applicable. The Netherlands is another popular holding company's location, and the treaty between the Netherlands and Kazakhstan is also good, 5%. So we have, when structuring investments in Kazakhstan, the Netherlands are very often used. So it's a relatively good holding company location, as well as Luxembourg. Yes, Luxembourg is also 5. Hong Kong is blacklisted in Kazakhstan, and there is no treaty. This is why it's usually not a good location for the holding company. Singapore, we have tick mark here, so it's good as well, 5% withholding tax. United Arab Emirates, and unlike Russia, Kazakhstan has a good treaty with United Arab Emirates. It provides for 5% withholding tax on dividends, and there are other benefits. So investors using this country, going through this country, can enjoy the minimum withholding tax rates, which is 5%. And also Ireland and the United Kingdom. Those countries, they are first of all commonly used as holding companies locations, and they have good treaties with Kazakhstan. Okay, so this is the list of countries. It's not exhaustive in any sense, but I think apart from the nominal rates, some other more broad considerations need to be taken into account. And I would like Temirlan to comment on this list of countries and how in Kazakhstan how the tax authorities apply and assess different countries, how they see investors from different countries, and how welcoming are they in applying treaty benefits to payments to these countries.
Thank you, Victor. I just wanted to mention that, and yes, as you said, there are certain other aspects that should be considered upon creating effective structure for investments in Kazakhstan. And first of all, these are the practical aspects of how the tax authorities in Kazakhstan treat the provisions on application of the double tax treaties. There is a certain the latest, I would say, updates coming in Kazakhstan legislation are more or less considered the application of multilateral instruments, so-called MLI, which actually introduce a principal purpose test in the double tax treaties, which first of all tries to understand whether there are any business reasons why the structure exists, and is there any tax reason why the structure actually appears this way. And what under development of this practice, our Kazakhstan tax authorities actually got their own, I wouldn't call it an unofficial blacklist, but certain special treatment of jurisdictions where zero or no taxation exists, like United Arab Emirates. Despite that, Kazakhstan has a double tax treaty with the UAE. Kazakhstan tax authorities may scrutinize transactions with holding companies or any other counterparties located in the United Arab Emirates, and first of all to understand whether there are any whether there are any signs of artificial business structure. And in case if they, I would call it, if they identify any of such signs, they may try to reject application of the double tax treaties and, of course, assess additional fines, taxes, and penalties. That's why it should be the substance standpoint should be considered first. And upon creating a structure, I would say that business need to find whether they got any real business purpose to be located in any of the jurisdictions. And actually, it's not only about the United Arab Emirates, it's also about some European countries where, for example, some participation exemption exists, or maybe some separate tax exemptions may be applied by the group in order to reduce their tax burden.
Mm-hmm. Mm-hmm. Yeah, and it's not uncommon to see a similar approach in other countries. For example, Russia many years ago started to apply the beneficial ownership concept, and it's not uncommon to see that the tax authorities scrutinize payments from the country to countries that they consider as offshore states or low tax jurisdictions. And indeed, it doesn't mean that the treaty benefits are not applicable. And we will see how the practice in Kazakhstan is going to develop. But overall, the bottom line is that substance needs to be taken care of, and the structure needs to be genuine and not artificial. So interposing a letterbox holding company is no longer a solution. I think is hardly ever a solution these days, but definitely it's not a solution in Kazakhstan. Okay, thank you, Temirlan. And as I can see, there are a few questions in the chat room, and let me respond to those.
Yeah, I just
Anton
wanted to
asks,
answer to. Mm-hmm.
Yeah, please go on.
Please proceed. I just wanted to answer on the question of Irena Braxator. She asked whether we have a separate blacklist or, I mean, in Kazakhstan, or it is actually the same blacklist as used for FATF. And to be honest, we got, I would say, several blacklists. One used for National Bank, if I'm not mistaken. Another one is for tax purposes, and there is also a third one. I actually do not remember for which purposes it was used. But anyway, there are certain blacklists with different number of countries included in them. And the tax one is a separate one, signed and actually determined by the decree of the Ministry of Finance. And I would say it's subject to updates, I would say constant updates. For example, United Arab Emirates, if I'm not mistaken, were part of that list until 2015, and from 2016 they were excluded. Same situation happened with Cyprus. They were in the list until 2014 or 2016, and once they were excluded, and currently we have a separate double tax treaty with Cyprus and United Arab Emirates. So things change in Kazakhstan, but still the lists are different. And yes, upon doing structuring, you need to consider all these documents. And I would say Victor could help you with this.
Yeah. Yeah, indeed. It's a separate blacklist and it's constantly evolving. Anton asks questions. Do we get slides afterwards? Yes, I forgot to mention that we are going to distribute slides as well as the recording. This webinar is being recorded, and after a few days, when the event after the event, we will distribute both the presentation and the recording. And by the way, on the slides, from time to time, you can see uh, hyperlinks. There are links to the text code and other documents that you can look up and follow if you would like to get more details. So from time to time, I put additional links for additional content on the slides, and you'll see you'll be able to use those when you receive the presentation. Okay, we have some more questions. Yes, another question about the materials. They will be distributed indeed. Irene Temirlan answered Irene's questions already, and I think there are a few questions on the question tab. No, we already addressed those. Okay, very good. Let's continue and move on. I will mark the questions that we answered as the questions that we answered. Okay, let's have a closer look at the way how the reduced withholding tax rates apply. So for dividends, as we already discussed, 15% rate is applicable. Starting next year, the 3-year exemption is no longer available, and only 10% after a 3-year holding period can apply. So yeah, that's the important development. And many treaties, as we already discussed, allow reducing the withholding tax rates for dividends to 5%. But there are conditions, and here on this slide I put a quote from the treaty between Kazakhstan and Germany, and it addresses the conditions under which dividends are subject to the reduced 5% rate. And there are a few things to note here. So it's as usual, Kazakhstan follows OECD Model Convention when treaties are concluded. So it's Article 10 and Clause 2, where the conditions for the reduced rates are set out. As you can see here, the 5 rates applies if the recipient of dividends is the beneficial owner. It also has to be a company. This is also important. If dividends are paid to individuals, the minimum 5% rates are usually not applicable. But in corporate structures, we have companies. So if the recipient of dividends is a company, then it can apply the 5% rate. But there is one more condition: it is direct holding of at least 25% of capital. It's highlighted here on the screen. So indeed, minority shareholders may not be able to benefit from the reduced withholding tax rates. And this participation threshold, it is common in many treaties that Kazakhstan has concluded. The exact number varies depending on the treaty, but it is usually there is usually a condition to hold certain investments, hold certain participation share in capital in the Kazakhstan subsidiary to apply the reduced withholding tax rate. It's interesting that in some treaties this investment can be held indirectly. So this particular treaty between Germany and Kazakhstan, it says that there should be direct participation, direct holding of the subsidiary in order to apply the reduced rate. But it's not always the case. And for example, in the treaty between Kazakhstan and the Netherlands, the condition is put differently. The treaty says that the investment can be held directly or indirectly. I do not recall the exact number. It should be around 25% as well, but directly or indirectly, which is an interesting point, and some question if it is possible to apply the reduced withholding tax rate to holding companies that are up the chain and somewhere along the chain of distribution of dividends. There is no similar look-through provisions in Kazakhstan legislation, but it's interesting that at least some treaties, they seem to be ready to be applicable also for indirect participations. Okay. On this slide, I would like to bring sort of a diagram where the procedure of applying the sort of decision-making process, or the procedure to apply the reduced withholding tax rates is presented. So if we have, specifically in relation to dividends, but it is very similar in relation to other passive income. If dividends are payable from Kazakhstan, then the first question is whether a tax treaty is applicable. And if the answer is negative, then there is no withholding tax. There is no reduced withholding tax rate, and the tax should be withheld at the domestic rate. But if the treaty is applicable, then a number of questions arises. So first of all, as we saw in the treaty with Germany, and as is the case in a number of other treaties, most other treaties, there should be a certain share in capital in order to apply the reduced withholding tax rates to dividends. That's the first sort of test question. The second is that we need to make sure that the company that receives dividends is the beneficial owner, and this is a complex concept. The term is not specifically defined. It's a broad term, and it follows kind of principle of substance over form, where we need to look at different factors and see if the company that receives income, for example, dividends, can really dispose of this income and is the beneficial owner rather than an intermediary or a conduit company. This concept is only being developed in Kazakhstan. There is no further guidance in the tax law as to how this beneficial ownership condition can be fulfilled, but it is there in many treaties. It is also in domestic law in Kazakhstan, and I think in the future years we will see how this concept applies. And I think Russia has accumulated a lot of experience of applying this beneficial ownership concepts, and we'll see how it goes. And I think that's the practice should develop and emerge in the next years. And there is also multilateral instruments which Kazakhstan concluded with other countries. And as Temirlan said, there is principal purpose test. In some treaties, there is limitation of benefits test. So all those tests that are applied by the multilateral instruments needs to be taken care of. By the way, not in all treaties, MLI multilateral instrument does not apply to all treaties in Kazakhstan. Some treaty partners, for some reason or another, didn't include Kazakhstan into the list of countries where MLI should apply. For example, Germany, there is no still MLI applicable to the treaty between Kazakhstan and Germany. So it's an important condition, but again, it remains to be seen how it's applied in Kazakhstan. And I think Temirlan has something to say about this.
Yeah, I just wanted to note that despite that certain double tax treaties were not included in the list covered by the MLI, like, for example, double tax treaty with Japan and Cyprus, it should be noted that the double tax treaty itself already has the provisions on principal purpose test incorporated in the double tax treaty. And for especially these two jurisdictions, Japan and Cyprus, you may find it, if I'm not mistaken, in Article 28 or 27, called limitation of benefits, if I'm not mistaken. The article should be named like this. So the MLI is not the only way how the principal purpose test could be applied to the double tax treaty, and it always need to be considered whether the double tax treaty itself has any other limitations that may affect your structure.
Yeah, indeed. And I think the reason that some countries are not covered was exactly that the treaties were very recent. For example, in Cyprus, the treaty was signed just a couple, maybe a few years ago. This is why this treaty already contained the necessary provisions. This is why multilateral instrument was not extended to these treaties. So indeed, even though MLI may not formally apply, the same tests may apply nevertheless. Okay, so good. Let's move on. So if you are sure that we pass all these conditions, then we need to make sure that the tax resident certificate is available. It's interesting that it may not be available on the date of payment. There is a provision that allows to receive tax resident certificates later on. Technically next year, so they are submitted to the tax authorities, I think, and they go along with corporate income tax return, which deadline is the 31st of March next year. So unlike in Russia, for example, where it is necessary to provide tax resident certificate beforehand, in Kazakhstan it's not the case. But still, when you apply a treaty, then you need to make sure that even if you do not dispose of a tax resident certificates on the spots, sort of on the dates, still you need to make sure that that you are going to obtain it. Otherwise, in the absence of the tax resident certificates, no treaty benefits apply. But if everything is fine and you have the documents, then the reduced withholding tax rate can apply. Okay, so I think we have a few more questions, and let me read those. Anastasia asks, could you please say what is considered a sufficient substance for a holding entity in Dubai from Kazakhstan point of view? Yeah, I think it's a very difficult question. I think the substance should be sufficient. And for example, in Russia, when we apply beneficial ownership concept, we look at multiple factors. And apart from substance in its physical, in its physical sense, there are other attributes, but substance is important. Usually, people and office space, but there is no specific, specific threshold or number or square meters that a particular company should have in order to be considered as a beneficial owner. But there are other attributes. For example, whether the company passes on this income to other parties. So in Russia, it was common to dispute and successfully dispute reduced withholding tax rates on the basis of passing through of income being transferred shortly after it is received by, for example, a Cypriot company, or as you are asking, by a company in United Arab Emirates to another state, especially to an offshore state. I don't know if Temirlan, you would like to comment something on substance and beneficial ownership criteria in general.
I actually agree with you, Victor, that it's quite a complex issue, and in Kazakhstan, I would say there are no direct requirements that upon payment of income to a non-resident, such non-resident should have a substance, should meet the substance requirements in the jurisdiction it is located or it is a resident of. But despite that, the substance itself just confirms that there are any other reasons why the company is located in the jurisdiction rather than having access to the tax network, double tax treaty network of this jurisdiction. And that's why I would say what just Victor mentioned before is, first of all, the company should be ready to present and provide maybe even documental support that it is located and actually performs some business, got an office, like a table, a computer, or any other assets that the company uses to provide services or perform its activities. And that there is no like post box office companies in the jurisdiction, because otherwise the tax authorities would most probably challenge the applicability of the double tax treaty. And to be honest, what currently happens when we discuss substance rules, I would say we're actually discussing a beneficial ownership concept, because this concept is a requirement in the Kazakhstan tax code upon payment of income to a non-resident and application of the double tax treaty. on passive income at least, and in certain ways to active income too, but this is special cases. On passive income, it is a test that should be met. And there is a definition of a beneficial owner. If I'm not mistaken, it is a person who may possess, own, and
Disposal, I think.
dispose the received income, and who is not considered as an agent or or a nominee.
Mm-hmm.
So, but there are no other guidance or like rules or strict provisions or something
Yeah.
detailed provided by the tax authorities how to determine the beneficial owner. And
Yeah.
to answer the question, as I see the question of Agrim Ilyasova, she asked whether the condition, as I understand, the beneficial ownership condition applies to the company payer or to the dividends itself. It actually applies to the company receiving income in the jurisdiction, in a foreign jurisdiction. And it actually should state that, and from practical point, I remember a letter from the tax authorities, or even maybe 2 or 3 letters from tax authorities, where they say that there are no guidance on how to determine the beneficial ownership. And actually, it is a requirement to the tax agent, a person who should withhold taxes in Kazakhstan. And that's why they should just get any documental support that will confirm the conditions written in the tax code, like it is not a nominee, it's not an agent, and they may possess, own, and dispose the income itself, but by themselves. So no such guidance and no, I would say, best practice right now, but it's always better to have any document confirming your position.
Yeah, in some countries, for example, they tend to apply a more legal approach if there is no legal obligation to distribute income further, and there is no legal contract documents that says that a person is acting as an agent or a nominee, then almost immediately a specific company or person is considered as a beneficial owner. But it's not always the case. It's not always the case. And in Russia, over the last maybe 7 or 8 years, we have seen how this concept emerged, and it basically was shapen in practice in court cases. And in Russia, we already have more than 40 court cases where this concept was applied with different outcomes. But we, based on the specific, examples, we can infer what factors are more important for what factors are less important. In Russia, I used to have a list of criteria, which I think was a few dozen of criteria, which some of them are more important, some of them are less, but they appeared in one or more court cases. And I think my expectation is that something similar we might see in Kazakhstan in the future years, because indeed this concept is important and there is little guidance anywhere, both in the domestic law, in clarifications, and in the OECD commentaries. So let's wait and see. But yeah, I totally agree. We need to have at least some basic confirmation that the company is the beneficial owner. And the more substance and other beneficial ownership attributes, such as payment of taxes, such as non-distribution of income to other entities, reinvestment of income, the more attributes we have, the better our position is. But unfortunately, there is no black and white answer to this question. I think we have a number of other questions. So you answered questions from Ijerim. Anton asks question about Turkey. Turkey was named as a favorable jurisdiction. Is there a double tax treaty between Kazakhstan and Turkey, and what is a reduced home tax rate? So yes, there is a tax treaty between Kazakhstan and Turkey, but it's hard for me to tell right away what the tax rate is. I'll have to look it up. It may be 5%. I hope it is 5%, but I do not remember by heart. But for interest and royalties, which are also subject to withholding tax, and we'll talk a bit later about those, the rates is not less than 10%. Kazakhstan usually Unlike Russia, there are no exemption for interest and royalties in Kazakhstan, so I would not expect it to see in the treaty between Kazakhstan and Turkey. Okay, let's move on. And this is one of the few examples where sort of beneficial ownership concept was applied in practice. And we have the Bukhtarminsk cement company case. And just let me describe the case because it's open. The court ruling was published. And in this case, dividends were declared by a subsidiary in Kazakhstan to its parent company in the Netherlands. So the Dutch parent company should have received dividends. There was a distribution or declaration of dividends. But instead of paying them directly to the parent company, the parent company asked the subsidiary to pay it to another entity, a related company located in Germany. And the reason was just business reason, technical reason, because the parent company didn't have proper bank accounts to pay dividends in domestic currency to the parent company. So this is why there was a request to pay these dividends to a related party, which shortly after it received dividends probably converted them and paid to the parent company. But the tax authorities, the tax inspector decided that the condition to apply double tax treaty and reduced withholding tax rate was violated and challenged the application of the 5% withholding tax rate, which was applicable. All the conditions were met to the Dutch parent company. Okay, so there was a dispute around the reduced withholding tax rate, and the position seemed to be along the lines that the tax code says that the reduced rates can be applied if income is paid to the beneficial owner of income. Okay, but in this case, income was not technically paid to the parent company, which was presented as the beneficial owner of this income. And that was the formal reason to challenge the withholding tax rates, which kind of demonstrates that the case is relatively recent. It happened, it was published a few years ago. It was 2019, maybe 2020. And it demonstrates that, to a certain extent, a formal approach of the tax authorities that read the tax codes literally and dispute the reduced withholding tax rate. But the judges, they decided differently and they supported the taxpayer. And it's interesting that there are three conditions stated in the court ruling for application of the reduced withholding tax rates, and the court said that there should be a double tax treaty. The non-resident company should be the beneficial owner of income, and the company should be considered a tax residence in the country with which the tax treaty applies. So the court supported the taxpayer, took the taxpayer's side, and basically rejected rejected to apply the domestic 15% withholding tax rate to dividends, and agreed that the 5% rate was applicable, which is good news. I think it demonstrates that although still such cases are relatively rare, and yeah, you not see there are only few court cases on beneficial ownership concept, but still the practice is emerging, and this particular case is positive. So I think it's good news for any international investors and any international investors, such as the investor that's claimed treaty benefits in this case. Okay, so before we move on to second subparts about capital gains, I just would like to say a few words about taxation of about benefits that the Astana International Financial Center provides. And we will talk about this, and Temirlan will talk about this in much more detail. But it wouldn't be fair not to tell a few words here. And there is an exemption for dividends distributable by participants to the AIFC, There is an exemption for dividends. It's quite favorable. As you can see on this slide, it's unconditional. There are kind of features of this exemption on this slide. The exemption is unconditional. So whenever a participant to the AIFC distributes dividends, it should not pay withholding tax. It doesn't depend on a particular jurisdiction, at least so far. Even dividends payable to blacklisted countries formally should not be subject to withholding tax. At least this is what the constitutional law says. And this exemption, the law said that exemption applies until the 1st of January 2066. I think it was 50-year exemption when it was introduced. So it's quite favorable exemption. And Temirlan, is it really as good as it seems? It seems too hard to believe that it's too good to be true, I must say.
Honestly speaking, Victor, yes, it is good as it is at the moment, and actually there are no official expectations on changes of this particular tax exemption provided for AIFC participants. What I would like to mention is that an AIFC participant is actually any legal entity created under the acts of the AIFC, and there's a point that the organizational forms provided in the AIFC are different from those used in the mainland of Kazakhstan. And what, from practical standpoint, I would say that, of course, the tax regime may, in future, be subject to certain changes, especially whenever there are certain guides or, I would say, actions issued by the OECD to tackle BEPS, to tackle base erosion and profit shifting. And to be honest, Kazakhstan support the OECD's BEPS actions, BEPS initiatives, and that's why in future it may happen that the dividends exemption may be changed, at least with respect to blacklisted jurisdictions. But currently, no, it does work the way it is written right now. There are no limitations, no exemptions, or I would say obstacles to apply it for jurisdictions from the blacklist of the Ministry of Finance.
Mm-hmm. Mm-hmm. Very, very interesting.
Yes, I would say the message I would like to deliver to the business is that changes anyway should be considered in future. So better be prepared, or at least expect certain changes and be flexible, especially in today's
in the modern world. I totally agree, and I think given that participants to the AIFC may hold investments, also investments in Kazakhstan, some investors may be incentivized to interpose participants to this AIFC to improve the tax efficiency of dividend flows, because they can go down, especially given the change, that the 3-year exemption is no longer going to be applicable next year. Some investors may choose to use a holding company in the AIFC, but obviously substance need to be taken care of, and business reasons. Obviously, although as we saw, and I think there is a one can note that in Kazakhstan, the tax authorities tend to be quite formal, and the case which we just considered demonstrates that. And formal approach may benefit investors in some cases if there is a formal incentive without any specific anti-abuse rules or substance requirements. It should apply, but still, I would warn investors against interposing letterbox companies, and always substance and business reason should be taken care of and considered. Okay, let's move on. And yeah, this is the quote from the constitutional law that basically introduces the exemption. As you can see, it's quite basic. I mean, it's very little text here, but the exemption, but this is probably the reason why the exemption applies so broadly. Okay, so the next part, or next sub part, is taxation of capital gains. and we'll look at structures as one presented on this slide. Here you can see a subsidiary in Kazakhstan and two layers of parent companies, one direct parent company and one indirect parent company. So what we should know is that capital gains from sale of shares in a Kazakhstan subsidiary are taxable, and direct sale of shares is a taxable event, regardless of the asset of the company. For example, in Russia, we are used to taxing only gains from disposal of property-rich companies which own immovable properties to a large extent. But in Kazakhstan, the tax rules are more strict. Any disposal of a Kazakhstan subsidiary is subject to tax. This also includes indirect disposal. So even if the indirect parent company disposes of another holding company outside of Kazakhstan, if the assets of this company are represented, their value is represented by more than 50% of assets located in Kazakhstan, then capital gains are taxable as well. Okay, the applicable rate is 15%. And again, here we see the increased 20% rate for blacklisted countries. And it's interesting that the mechanism, the way that the treaties apply is that even if there is a possibility to exempt capital gains based on an applicable double tax treaty, income or withholding tax should anyway be remitted to the state and only then refunded. So it's interesting, and in some countries the mechanism is similar. For capital gains, withholding tax should first be paid into the state and then refunded by the party which believes that treaty benefits are applicable. And this is a time-consuming and sometimes onerous exercise. But the good news is that there is a 3-year exemption, which is very similar to the exemption that we saw for dividends. There is a 3-year exemption for capital gains. So if the investment is held long enough, then the capital gains upon the sale of this investment is exempt. The 3-year exemption, let's look at the conditions. It doesn't apply to blacklisted countries. So if the investor is located in an offshore jurisdiction in a blacklisted country, then the exemption, the 3-year exemption, does not apply. As the name suggests, the investment should be held for 3 years, and then the exemption applies. So it's for long-term investments. There is an important exception to this incentive. It is not applicable to subsoil users. So if capital gains they originate from sale of assets which value consists more by 50% of assets of subsoil users, then the 3-year exemption is not available. And I can add that treaty benefits are not available either, almost or entirely, because in treaties that Kazakhstan concluded with other countries, subsoil licenses, they are treated as immovable property, as you may know, alienation of immovable property or assets that are treated as immovable property are usually not protected by treaty benefits, and this is the case in most, if not all, treaties that Kazakhstan concluded with other countries. So companies that extract mineral resources should be prepared to pay more tax upon sale of this asset. I think we have a question. Let me read the question. Anastasia asked a question: Are Kazakhstan authorities refunding withholding tax in practice? I think the answer is yes. What I heard is that this is a time-consuming and difficult process. I don't know, Temirlan, if you would like to comment on the way how refunds are made in Kazakhstan. What I heard is that it may take years, or at least more than a year, to refund tax, even though there may be treaty benefits or good grounds for the taxpayer to refund tax.
Yeah, to be honest, it actually depends. It depends on the amounts to be refunded. It depends on the tax authorities. I mean, the location of tax authorities, like whether you are on the west of Kazakhstan, or whether you are somewhere else. I mean, like usually the West, I mean, is a very oil-rich region, Kazakhstan, where the subsurface users are located, and usually the budget may be different for different regions in Kazakhstan. But I would agree with Victor that what he said, that the process is quite long term. It may take years. What I remember from practice, one of our clients, when I was also working at a consulting company, one of our clients applied for a refund and been waiting for a year and a half, if I'm not mistaken, until they got the payment. But I also remember with the cases when the refunds were provided quite fast. I would say like 2, 3 months is for one, I would say, special taxpayer. I mean, special from the standpoint that it is in Kazakhstan, it's called city градообразующее
Uh-huh.
предприятие,
Okay.
city,
Yeah, it's
like
an
one
important,
of the
yeah,
major
like a
taxpayer of the city.
major infrastructure taxpayer, or
Yeah,
major taxpayer.
yeah, that's why it all depends. Every cases are different. So, but it is considered in the tax legislation. It may work from time to time, but
Mhm.
and yes, you better be prepared to spend a lot of time to, I would say, discuss with tax authorities how and when they will provide you with a refund.
Yeah. Yeah. Thank you, Temirlan. Let's move on. To finish with the taxation of capital gains, um, we need to look at the incentive that is provided by the AIFC. And again, we have there is an exemption which works very similarly to the exemption to dividends, which is basically unconditional. Whenever a parent company disposes of a participants in AIFC, regardless of whether it is a blacklisted country where the parent company is located, regardless of the composition of assets, so subsoil users may also technically benefit from the exemption. But yeah, again, this looks good or too good to be true, but it is what it is. There is an exemption for capital gains without any, pretty much without any additional conditions for alienation of shares in subsidiaries that are participants to the AIFC, which we'll discuss in the last part. Well, Temirlan will tell us about the benefits and features of the Astana International Financial Center. Okay, let's move on. And the next part is structuring of financing. The third subpart of the four parts in the first part of our webinar, where we discuss structuring of investments in Kazakhstan. And yeah, investors have a choice. Usually, it is possible to choose between equity and loan financing of pretty much any asset. And Kazakhstan subsidiaries are not Kazakhstan assets are not an exception. So yeah, what needs to be remembered and taken care of when structuring of loan financing of Kazakhstan assets? First of all, there are general deductibility rules. Interest is deductible based on general conditions, and we will discuss it in a minute. Then withholding tax applies. Interest is subject to withholding tax, and we'll talk about this later as well. There are capitalization rules, and there are transfer pricing rules. So the first condition to make sure that interest is deductible is that it qualifies the general expense deductibility principles. And the quote from the tax code is on the slide. It effectively says that expenses should be actually incurred if expenses are deductible if there are documents that confirm such expenses and the expenses are related to income generating activities. So this is the general principle, and the point here is that interest should relate to income generating activities. So the loan should relate to interests to income generating activities. And I think with Temirlan we discussed cases where, for example, the tax authorities tend to dispute interests that they believe is related to loans which were spent on non-deductible expenses, right? I think this is an interesting twist in practice, where if the tax authorities find non-deductible expenses, they also try to allocate some or all loan financing, unless it is specifically allocated to some other needs, and use it as a grounds to dispute deductibility of interest. Am I right?
Yeah, for sure, Viktor. What again should be considered in practice is that um, it really depends whether the interest will be deductible or not. Really depends on how well the contract, the loan agreement is written and structured. That's why in practice, what I've seen, for example, there are loans provided for general purposes, and since there is no way to trace the cash received under this loan, the tax authorities actually may, or I would say even tend to allocate by their own understanding how these funds were used. And in case if during the just for example, there is some fixed asset, I would say a big, like factory, for example, there is a factory. There is a section of the factory currently under construction. And for example, you get a loan for general purposes and use part of this loan to create this, to finance this construction process of this section. But at the end of the year, the construction is still in process. You do not get any income out of that construction, and actually it does not even provide any amortization expenses. And generally, such interest should be capitalized, but in certain cases, the taxpayers may try to, I would say, optimize their tax expenses. And as this loan is actually non-traceable and the purpose is general purpose, they may try to use it for, but just by some reason, try to use it for deduction for corporate income taxes. Purposes. And in that case, the tax authorities may try, and I would say even challenge your approach and reallocate such interest to the construction part, I mean to capitalize this part, which means exempted from or excluded from deduction and assess additional corporate income tax. That's why whenever you decide to provide the loan financing to your counterparties, it should be considered how this money will be used, and it is even better if there will be any, I would say, report that will confirm how the cash received under such general loan agreements have been used. So that is a general recommendation.
Yeah. Thank you, Temirlan. So this is one condition. Another one or factor which affects tax efficiency of loan financing is obviously withholding tax. And again, the rates are similar: 15% for in most cases and 20% for blacklisted countries. And obviously, interest is taxable at source regardless whether the lender is a related party or not. But there are some specific rules to be taken into account, to be considered. First of all, unlike in many other countries, in Russia, for example, interest as well as other income which is taxable at source, the moments of payments or the moments when the withholding tax should be remitted to the states is not always the payments, although payments is considered as withholding tax obligation. When payment is made, then the withholding tax obligation arises. But even if payment is not made and instead interest is accrued and deducted as an expense, this is also considered a taxable event for withholding tax purposes. So whenever interest is paid or included into expense, um, it should be subject to withholding tax rates. And the reduced tax rates applicable under many treaties, under most treaties that Kazakhstan has concluded, is 10%. Okay. Okay. Let's look at the list of countries, and I'll repeat the same, 7 or 8 countries. And as with dividends, we see that many countries that are typically used for structuring financing activities, they are good to, at least on the face value, they allow to apply the minimum withholding tax rate of 10%. The exception on this list is Hong Kong, because there is no treaty between Kazakhstan and Hong Kong, and the country is blacklisted. So although it is not uncommon to see financial companies and financial centers in Hong Kong, they do not provide a good solution for lending and payment of interests to this country. Irena asks question: if it is obligatory to put interest rates in loan agreements, or in other words, is there anything that prevents companies from extending interest-free loans? Well, from my perspective, I do not see why it should bother the tax authorities. At least if the lender is outside Kazakhstan, there is no damage to the state's budget in Kazakhstan if there is no interest instead of interest rate. What do you think, Temirlan?
To be honest, it is better that you either directly indicate that there is no interest provided under this agreement, like it is interest-free loan, or it is a certain, but at least some exact number, amount, or percentage written in the contract, like 0.01%, just in case if there will be any disputes by the tax authorities, whether there are any other payments related to such a related entity, may be considered as interest. I mean, be characterized or treated by the tax authorities in some aggressive way. So I would say that the ambiguity of provisions in the contract may not always work in favor of the taxpayer. So it is a question.
In Russia, for example, we used to have very long. Yeah, sorry. In Russia, for example, we used to have very long time ago a concept where interest-free loans were considered. Well, there was an attempt to consider them as a sort of gift to the borrower, and some kind of imputed taxable income in this case. But I don't know if you've seen such practice in Kazakhstan, and if there is anything we should be concerned of if the loan is interest-free.
Yeah, and there is good comment from Agrim Ilyasova. It's always a matter of transfer pricing. Whenever the counterparty in the agreement is a non-resident of Kazakhstan, the transfer pricing rules apply, and it should be considered that this rate actually should be within the market range. I mean, there should be some benchmarking study confirming that the rate applied in this treaty is at market level. But what may happen if the rate is like non-market, for example? For example, if it is too low, the tax authorities may challenge the position of the tax agent. I mean, the Kazakhstan company paying interest or actually not paying interest to non-resident, or paying too low interest, and increase the amount of withholding tax as if the interest in a contract was at a market rate. For example, 0.1 was used as a interest in the contract. The tax authorities, per their benchmarks, will decide that the rate should be like 7%. So the withholding tax will be assessed on such 7%. Yeah. So that's transfer pricing is a separate, actually, section of, I would say, our webinar in future that we will try to cover.
Indeed. Yeah, I agree. It's a good point. Indeed, if I don't know if there is such practice, but still there is a possibility that transfer pricing rules would be applied to withholding tax. And obviously, on the sides of the lender as well, interest-free loans may not work because on the lender side, the tax authorities would expect some interest income. So I think it's necessary to look at in a broad context, and at the end of the day, interest-free loans may not work. But if you can justify the low rates and provide, substance, transfer pricing supports for the low rates, then I see no reasons why you shouldn't use such low rates. Okay. Jeremy asks question, which I'm afraid I will not be able to reply immediately, but I will read it out. Can debt be converted into equity without an adverse tax charge? What do you think?
Victor, if I'm not mistaken, in the mainland, I mean, per legislation used in the Kazakhstan general jurisdiction, conversion of equity, of a debt into an equity is forbidden with certain exceptions. But in the AIFC, it is okay to convert. I mean, our legislation, our acts actually allows to convert debt into an equity. But about the adverse tax charge, I would say still the tax code, I mean, there are no separate provisions in the constitutional law, I would say exemptions for such transaction. That's why we should use the general approach written in the tax code for the whole jurisdiction, I mean, for the whole Kazakhstan. And actually in Kazakhstan, it may be considered as a debt forgiveness, which is subject to 20% corporate income tax. I mean, the legal entity which debt was forgiven should consider the cash received as an income free of charge, received free of charge, cash, I would say, received free of charge, and which should constitute its income subject to 20% corporate income tax. And there are no other provisions that would allow to avoid taxation in this case. In my opinion, it may, I would say, the tax payers may try to consult with the tax authorities whether the tax authorities will consider such transfer of debt into an equity as a taxable transaction or not. But from my experience, I would expect that they would say, yes, you will pay 20% from that. So.
Yeah, well, I think, yeah, so there are two challenges here. First is that it may be legally prohibited or very complicated, and second is that there is a risk that it's going to be considered as debt forgiveness, which is taxable. But there is always a possibility to repay this loan and then contribute it the same money back into equity, which is of course more complicated and involves transactions and probably bank charges. But this possibility is there. Okay, let's move on. Let's move on and say a few words about thin capitalization. So there are limits to interest deductibility. For these limits, first of all, the term interest, which is subject to thin cap rules or limitations, is defined broadly. Related party transactions are considered based on the threshold of 10%, and generally there is a broad definition of related party for this purpose. So, interestingly enough, is that thin capitalization applies to payment establishment, which is not the case, for example, in Russia. Maybe Russia is the only country where thin cap works this way, but it's an interesting observation that I made. So there is a formula. The formula is on the screen, and it's provided, it's presented here in a very simplified manner. There is always some good interest, and then bad interest is multiplied by a ratio of own capital to total debt multiplied by 4. So there is a reference to own capital related to total debt, and since it is multiplied by 4, this means that if you can't basically overlend or to lend too much to the subsidiary to the extent that its debt exceeds 4 times its equity. This is basically what the formula says. So it's 4-to-1 ratio in Kazakhstan for most businesses. There is an increased 7-to-1 ratio for financial industry, but for most businesses it's 4-to-1. And what is referred as bad debts consists of interest payable to related parties, obviously. Also lenders that are blacklisted or located in countries that are in the blacklist. And there is also a rule that loan which is guaranteed or secured or backed up by a deposit from a related party is also considered bad interest and is subject to thin cap limitations. Okay, so this is how the rules look. Unlike in Russia, they do not say that excess interest should be reclassified into dividends. So there is no immediate outcome that excess interest is going to be subject to withholding tax as dividends, or in any other ways subject to additional taxation. But there is a general provision that if interest or any other expense is not arm's length, then it can be recharacterized into dividends because it's part of the dividends definition in the tax code of Kazakhstan. And maybe it doesn't make a lot of sense to recharacterize the interest into dividends anyway, because interest is subject to 10% withholding tax rates, while dividends can be subject to as low as 5%. Okay, so this is FinCap. And I didn't say anything about transfer pricing, and I'm not an expert in transfer pricing, and so obviously this is a whole different discussion for another time, but it is also should be considered. So related party transactions, including loans, should be properly documented and supported by transfer pricing studies. Okay, let's move on and talk about operating activities, and we will be brief here because although operating activities, they are very diverse, we will just say the basics because each situation is very different and unique. Sometimes it's hard to make general conclusions. So if we look at the situation, at the simple structure where a company in Kazakhstan acquires something and then sells its output, then its activities, its profit is subject to standard corporate income tax at a rate of 20%. VAT applies. The VAT rate is 12%, and there is also taxation of dividends, distributed dividends, which can be as low as 5% after the 3-year exemption is no longer applicable. Or there are other exemptions, such as the AIFC exemption, that can go to zero. Still can go bring the tax rate to zero. And transfer pricing rules applies, obviously, if there are transactions with related parties. The activities can be structured through a branch instead of a subsidiary, and there is always a choice when you start your operations to conduct those operations through a permanent establishment or through a permanent establishment, basically for tax purposes, or branch legal wise. It's interesting that the rate is the same, but there is also so-called net income tax of 15%, which I think the idea behind this net income tax for branches is to equalize subsidiaries which distribute dividends, which are subject to additional withholding tax with branches. And this 15% rate, in some treaties it can be reduced, but the provisions that allow reducing withholding tax rate are not in Kazakhstan, are not as common as provisions that allow reducing dividends withholding tax rate. So, for example, in the treaty between Kazakhstan and the Netherlands, there is a provision that allows to decrease this net income tax from 15 to 5%. But it's not as common as well as one might expect. So there is certain disadvantage of having less opportunities to apply treaty benefits when structuring investments through a branch in Kazakhstan. Okay, so and then if we look at royalties, For example, if a Kazakhstan company pays and receives royalty income, then royalties are also subject to withholding tax. So if there is a company which, for example, license something from outside Kazakhstan, it should pay withholding tax of 15%, and there is no treaty which allows to reduce it below 10%. So minimum withholding tax rates applied to royalties is 10%. And there are VAT rules, and for royalties, the place of supply is determined based on the location of the uh, recipients of royalties, of the payer, of the recipient of the license rights, and of the payer of royalties. So on acquisition of, on payment of royalties, there is also VAT charge, reverse charge VAT, which applies and needs to be taken into account. Okay, and here we should probably mention another area or free zones, also, so to say, which is called Astana Hub. Astana Hub is designed specifically for IT business, and there are certain benefits there. There is VAT exemption, which is good, corporate income tax exemption, and also withholding tax exemption. Some of these exemptions, they last only for certain period of time, for several years, but still some companies choose to locate their businesses if they have, well, IT companies, many IT companies, including Russian businesses, choose to locate their operations in Astana Hub to enjoy various exemptions. It wouldn't be fair not to say about this. Okay, shall we move on? Let me check if we have more questions. I don't really think so. I don't really think so. And we are moving on, and the second part is about the future tax changes which are on the way. And yeah, in July, a law was introduced that changed quite a diverse number, I would say, of tax rules. And the changes that relate to cross-border structures, they come into effect starting next year, starting in the 1st of January 2023. I will not tell about the whole document, the whole law, but the most important provisions we will definitely need to discuss. So dividends. The law provided certain exemptions, additional rules to tax dividends. First one is that generally dividends are exempt. Dividends received by a company in Kazakhstan are exempt, but there was an exception if dividends are paid out of profits which were not subject to corporate income tax. The rule is defined in a more sophisticated way, but basically it says that if dividends are paid out of tax-free profits, then they should not be exempt. But this exception is abolished. So the good news is that the law abolishes one of the exceptions for dividend exemption. But another exemption is supposed to work based on more strict rules. There is an exemption in the tax code that allows not to pay tax on dividends received from listed shares, but if and the rule, which will be in effect next year, will say that only certain trades should happen. The securities that are listed and generate dividends. So in order to apply the exemption to these dividends, these securities, they need to be traded actively. There is no guidance yet about this provision, but the expectation is that it should be published in the near future, so that it applies starting next year. Temirlan, what would you like to say?
Actually, I just want to say what you just mentioned, that the rules were not published yet. At least I haven't seen the finalized version, but we expect the rules will come to the light in the nearest future, I would say by December of this year, and that the taxpayers may actually reflect or provide their comments on the upcoming changes. What I would expect that the active trading would mean certain level of activity at the stock exchange, like sale and purchase and sale of particular security, but maybe certain expectations on the volume of trades. But what should be considered is that the only dividends are subject to changes from the purpose of active trading requirement. The interest income is out of scope, and if I'm not mistaken, the capital gains are also out of scope for these purposes.
Yeah, yeah, indeed. And I think the purpose of the rule is to avoid thinly traded assets being listed and qualifying for the exemption. Obviously, the tax authorities would not want to grant exemptions on the mere basis that shares are listed or just published and registered with the stock exchange. They should be traded. There should be actual turnover, some turnover threshold or something behind the asset, behind the security. Okay. The next change, and we already discussed it, it's the change that applies to distribution of dividends out of Kazakhstan, and the exemption is replaced by reduction of withholding tax to 10%. Another very important change which affects a lot of businesses is that well, there is a limit. There's going to be a limit on deductibility of expenses related to certain intragroup services which are paid to related companies outside of Kazakhstan. And on the slides, you see this list. It's quite broad. It contains, I'll just name a few: management, consulting, and similar services, audit, accounting, financial services, royalties, and rights to use intellectual property are also listed here. So the list is really broad, and I think many intragroup charges will fall under this limit. And the rule says that next year these services can only be deductible within the threshold of 3% of the subsidiaries' taxable revenue. Okay, so yeah, I think that's a major change. And in some businesses, intragroup expenses to non-Kazakhstan related parties can significantly exceed these thresholds. And in this case, these businesses will no longer be able to deduct in full their intragroup service fees and royalties. And we have a question. Actually, we have this question relates to this rule from one of the participants, and basically the question, the participant wonders what was the reason behind those measures, and to quote the question, draconian fiscal measures relating to the change and to the deductibility of intragroup services. It's hard to tell, but maybe Temirlan, you know something why such a limit was introduced.
For sure. I've been part of this working group. I mean, I've been participating in the working group under the Minister of Economy, if I'm not mistaken, when these changes were discussed. There was an idea that, first of all, in February, if I'm not mistaken, of this year, there was a presidential message written by Kassym-Jomart Tokayev, our president, where he noted that certain groups, certain group of companies are using service agreements and other ways, I would say artificial ways, to avoid taxation in Kazakhstan and actually was not withheld. I'm sorry, вывод капитала.
Diverting profits from Kazakhstan outside the country to extract or divert profits. I would say.
Yeah, and it was mentioned that actually such groups were using certain schemes where no services were provided, like artificial schemes, where actually our budget which resulted in certain negative effect on our budget. That's why it was provided that the government should take certain measures to limit such capital, I would say, evasion from taxation of a capital outgoing from Kazakhstan. And I would say that this measure on non-deductibility of intragroup services is actually an echo or just a part of the measures considered by the State Revenue Committee. But I would say the measures were quite rough, and we may expect certain changes in future, as the initial idea was to limit the artificial avoidance of taxation and artificial
arrangement transactions. That's
arrangement
quite normal.
transaction, rather than make suffering all the business that use any intragroup services or intragroup arrangements. So, but at the moment, the measures are the way they are currently in the law. But I would say the business, well, the message for the business is that you don't need to keep silence. You may write to the special organizations like Association of Taxpayers in Kazakhstan, and other organizations that may actually sound your voice, may transfer it to the state authorities, and the changes may come in the future. At least what I've seen in Kazakhstan, that whenever there's a big problem, the government usually tries to listen to the business.
Yeah. Let's hope so. And indeed, from what you are saying, it looks like the idea was to combat tax evasion, but then bona fide taxpayers had to suffer from this change, which is unfortunate. Okay, let's move on. And there is another question relating to this change. What are possible options for transformation of services, including royalties and consulting services, in connection with changes in tax legislation in terms of services from affiliates? So I think the question says what can be done, and can some services be transformed or changed into other, so that they are not subject to this limitation? And I think the answer is yes, if possible. It's not always possible, and obviously nobody will want to distort the reality, so to say, to change the nature of services artificially. But from my experience in Russia some time ago, quite a long time ago, it was difficult. There was a trend to dispute the deductibility of royalties, and at that time, several importers of goods into Russia decided to include their royalties into the cost of goods. And obviously, although sometimes this can effectively solve the issue of royalties deductibility, it's not always possible, and etc. Yeah, there needs to be, for example, it may have customs implications, unfavorable customs implications, but still, there is a possibility, for example, if there is a flow of goods which are being imported into Kazakhstan, you can consider if there is a room to increase the cost of goods by including some parts of your expenses into them instead of charging them directly. So I think there is some room for thoughts, at least for thinking in this respect, in this direction. Okay, so I decided to share some ideas about what can be done in view of the proposed changes. So 4 actions before the end of 2023. And first of all, since withholding tax, 3-year withholding tax dividend exemption is going to cease to exist next year, it may be a good idea to distribute as much dividends as you can, as long as you can benefit from the 3-year exemption. I repeat, I remind you that subsoils users are not able to benefit from the exemption, but other companies, if the conditions are fulfilled until the end of the year, are able to distribute dividends and enjoy the exemption. Next year, it will not be possible, so it may be a good idea to distribute dividends. Second, it may make sense to look at your cross-border structures and see if they stand the MLI and beneficial ownership tests. I will say no more here because it's a complex context and concepts. Those are complex concepts, but you need to have a look at your structures, because if you used to apply the exemption for dividends, it's not going to work any longer starting next year, and you'll have to defend your treaty benefits. And yeah, third, you may want to improve your structures. You may have a structure where the 5% withholding tax rate is not applicable for one reason or another, and you should strive to approach, to manage your structure in a way that you apply the 5% withholding tax rate to dividends. It's a complex exercise, and each situation is unique, but there is always possibility, to improve it to as low as 5%, the holding tax to dividends. And finally, look at your cross-border payments, whether they qualify for the lists of limited fees, fees which deductibility is limited next year, and if necessary, change your structure, or at least, well, assess it and compare those fees to your revenue, and assess the impact that your structure may have next year. Okay, now we should move on and discuss the opportunities and various incentives that are granted by the Astana International Financial Center. And I think it's time for you, Temirlan. The floor is yours, and over to you.
Thank you very much, Victor. Just a moment, I'll get the control. Okay, here we are. Before I move to maybe the key message in my presentation with respect to taxation, peculiarities of taxation in the AIFC, and what exemptions AIFC provide to our participants, I just wanted to mention that AIFC is, first of all, a jurisdiction. It's not only one organization or certain companies or a building, I would say, in Astana. And the structure on the slide is one of the, I would say, just a broad picture how the AIFC is structured and how it works. And first of all, there is AIFC Managing Council, where, if not mistaken, the Prime Minister and other ministers of the Republic of Kazakhstan take a chair and actually manage, I would say, perform a certain managing function over the AIFC. Right after that, there is a governor of the AIFC, Kalgin, who was appointed by the President of the Republic of Kazakhstan, and who actually performed certain administration function with respect to the AIFC as a governor. And the main, I would say, bodies, the key bodies in the AIFC are the AIFC administration, the Astana Financial Services Authority, the AIFC Court, and AIFC International Arbitration Center. These organs, they provide I would say, the general infrastructure in the AIFC, and actually very, I would say, many incentives and activities done in the AIFC and developments made in the AIFC are done by these organs along with the governor and the AIFC Managing Council. And what also should be considered is that whenever you, for example, you would like to have a chat with any of the AIFC representatives, for example, with me, there are other, I would say, organizations under the organs of the AIFC, which you may see in this gray box on the right side of the slide. For example, I am a senior manager working at the Structuring and Solutions Department of the Business Connect unit, which is a fourth unit in the box. And there are many other organizations that perform certain, certain local tasks and functions assigned by the organs of the AIFC, and which actually allows us to work effectively by diversifying our activity and by, I would say, doing all these things together. And whenever you would like to connect with us, just please consider on which topic you would like to discuss, and maybe which person exactly you will need For example, if you are an IT company, then it is better to connect with a tech hub in AIFC, as they actually provide, I would say, the full support to participants that would like to perform certain activities in IT sphere. In other cases, for example, you may connect with a business connect with me. Just write me an email and I'll try to answer all your questions that within my field of understanding. So that's basically it. And maybe some numbers about the AIFC and some, I would say, interesting fact. The AIFC territory is not a territory of the AIFC business center only. This is quite a large territory of the, we usually call it the left side of Astana, of our capital, but the territory is quite large, and you may, in case if you would like to become an AIFC participant, there's no need to be located right near the AIFC, jurisdiction, the AIFC authority. You may locate on any side within this big territory in Astana, and that would be enough to qualify for this criteria. Currently, we have more than 1,500 companies registered from more than 16 or already 69 countries. Thanks to my colleagues, they were updating these numbers. Out of this 1,500, about 220 companies received licenses. There are certain, we will discuss it a little bit later, there are certain activities, usually these are the financial activities and professional, which are subject to licensing in the AIFC, and the AFSA, Astana International Financial Authority, a financial services authority. They provide assessment, and upon completing all the checks, I would say, they provide with a license to perform this financial or professional activity to our participants. And such participants also get certain tax exemptions. And it's around 16 billion investments received through the AIFC, and by this number, I would just highlight the importance how these jurisdictions, how the AIFC jurisdiction and actually the approach in our jurisdiction, I would say, change certain sectors of economies in Kazakhstan. We also got on the previous slide, I just mentioned that we got an AIFC court and AIFC International Arbitration Center. Currently, there are more than 1,000 cases reviewed by these authorities, and the numbers are growing. And what I've been recently, my colleagues shared with me an experience that there was a case where the representatives of state authorities lost in a case on, I would say, on a business nature, of course, where the foreign investor claims the payment for the services done, for the work done, and the state authorities rejected by certain reasons. And the court came to this case, just solved it in favor of the investor, which also shows that in certain case, whenever you expect investments in Kazakhstan, there may be other instruments. If you other instruments, more common to the especially European jurisdiction, which you may prefer, and these instruments are available in the AIFC. We also have our own, I would say, our own stock exchange, Astana International Exchange, or AIX, short commonly. There are about 4 billion investments attracted through this platform, and currently these numbers are growing again. There are a number of securities available only on the AIX, and certain programs which are currently, I would say, developing with the promotion of the AIX as a platform for investments in Kazakhstan and for the international investors as well. And the key moments. What I would say about the tax exemptions AIFC. Basically, as we've been discussing with Victor and what you heard already about the dividends and capital gains, there are certain exemptions available for any AIFC participants, for any legal entities registered under the laws of AIFC. But certain tax exemptions provided by the constitutional statute are available only for AIFC participants having a license to perform regulated activity. And that's why this slide is just basically divided on two sections. And let's discuss the first one. Whenever you, for example, would like to create a holding company in the AIFC, performing a holding function is not regulated activity, there is no need for a license. And that's why the exemptions available for such holding entity will be limited to the following: the dividends received by the shareholders of such holding company are exempt from corporate income tax and personal income tax. It means it doesn't really matter whether there is any individual or legal entity above this holding company. And the second tax exemption is exemption from taxation of capital gains in case if you would like to sell or transfer shares in such AIFC participant. For example, whenever you would like to just exit the jurisdiction or close your activity in a certain way. Another two exemptions are available for actually for any organizations, not only for AIFC participants. For example, if you are a company if you are a limited company, for example, on Bagama, you would like to have a debt instruments listed on AIX, you may do it. And in that cases, you will receive dividends and interest exemption on such a security if it is officially listed on AIX. And as previously Victor mentioned, there are certain trends and changes in the legislation regarding the dividends on securities listed on Kazakhstan stock exchanges, which may require active trading. With respect to capital gains, there are no active trading requirement considered so far, and such securities listed on AIX will be exempt from capital gains in Kazakhstan. And with respect to the regulated activities, the key issue is that whenever you provide services considered as regulated, you have a license received from AIFC for doing this. You may have exemption from corporate income tax, and actually it is not a PAT, it's not a personal income tax, it is value-added tax, VAT, on income received from such services. Such exemptions will be granted. I should say that there should be a separate accounting considered, and such exemptions will be available only for services considered as performed under regulated activities. In case if you would like to provide a professional service, for example, it is a consulting, you would like to open a consulting company, provide consulting services to AIFC participants or AIFC bodies or organizations. In that case, you may only enjoy the exemption from corporate income tax. Unfortunately, value-added tax is not the case. In case if you provide financial services, you may also have an exemption from personal income tax for foreign nationals who has an employment agreement with you, I mean with the AIFC participant, with a legal entity here. In such cases, the personal income tax won't be taxed in Kazakhstan, but other taxes should be anyway considered, like social tax, social contributions, and other, I would say, fees and payments considered for salary income. And the last but not least, the exemption from land tax and property tax for the object located on the territory of the AIFC. As I mentioned previously, the territory is quite large. So in case if your business will be considered to purchase any building for any purpose, like even for further sale, during the time of possession of such asset, you won't need to pay a land tax or property tax for such object. And the question, I would say, from my understanding, the first question is, what is regulated activity? The regulated activity is written first in the constitutional statute of the AIFC, and also it's written in a special joint order signed by the Ministry of Economy, Ministry of Finance, and the AIFC, where 34 types of activities are determined, like trust services, providing credits, Islamic financial institution, etc. The Constitutional Statute also considered conventional Islamic banking services, reinsurance and insurance services, insurance brokerage services, investment management services for assets and investment funds, and other services of a financial nature. The professional services, which I mentioned before, are including consulting, accounting, legal, audit services, and credit rating services. These one are exempt in the yellow box, are exempt from corporate income tax, and in general box, they are exempt from corporate income tax and value added tax, if the license is provided, of course. And what I just wanted to mention, there are other exemptions available in the tax code that are not directly written in the constitutional statute of the AIFC, and this one is a good example how AIFC developed their infrastructure for foreign investments. You may create a collective, I would say the business may apply to AFSA to receive a license for managing collective investment schemes or so-called investment funds. And while fund manager, when the fund manager has this license, they may create an investment fund, and the investments received from investors will not be considered as a taxable event. Whenever the investments will be put into an investment objects, such purchase, for example, of shares in Apple, just for example, such purchase will not be considered as a taxable event in Kazakhstan. Whenever you, in future, the investment fund decide to sell their investments, capital gains, interest, dividends, and other income will be considered as an investment income of an investment fund in the AIFC and will be subject to full exemption from corporate income tax and value-added tax. Then, the accumulated profit at investment fund level can be distributed among the investors, and the dividends in such cases, investments provided by the investors will be exchanged on shares, and dividends on such shares upon distribution of retained earnings will not be taxed in Kazakhstan and will be exempt effectively from corporate income tax and personal income tax. So there is no taxation during this flow of investments back and forth. That's why the instruments like collective investment schemes in AIFC may be quite effective in case if you would like to create an investment pool or just consider certain investment objectives. And also I should mention that income of a fund manager, their commission for managing such investment fund is also exempt from corporate income tax and value-added tax. That's why in case if you as a business would like to consider creating here a fund managing company, certain tax exemption, I would say certain infrastructure is already in place, and I would be glad to discuss any of such details with you if you having any options or considerations at the moment. So that's basically it. Victor, I would like to give speech to you.
Yeah, I think we are almost done. I mean, before we call it today, let's look at the questions, and I think we have one question relating to the AIFC. If a subsidiary in AIFC owns a stake in another entity in Kazakhstan, let's say an LLP, how dividends received by that AIFC subsidiary from Kazakhstan entity are taxed? Yeah, well, dividends are exempt. Dividends are exempt, mostly exempt. There was an exception, and I mentioned it on one of the slides. There was an exception for dividend exemptions. Dividend exemption if they are paid out of non-tax of the profits which were not taxable. But even this exception is supposed to be abolished next year. So dividends are mostly exempt, and this is the general provision of the tax code of Kazakhstan. You do not need a special rule or incentive, additional incentive to exempt dividends. And I think this is a very good question because it demonstrates that if the company registered in the AIFC invests in other subsidiaries in Kazakhstan, it may allow to distribute dividends quite efficiently, especially given that next year we will not see a clear exemption applicable any longer. So indeed, holding companies in the AIFC seem to be a good solution as long as you can, put substance there and justify the structure from business perspective. Okay, let me check. I think we have run out of questions, and this seems to be it from our side. This is the last slide with our contact details, and I'm never tired of repeating that each situation is unique and each structure is different. And being a consultant, I help my clients to improve their tax structures and reduce risks and improve tax efficiency and adapt international cross-border structures to ever-changing environments. So I encourage you to keep in touch and let's be in contact. Feel free to contact me whenever you would like to discuss any cross-border tax matters that you are facing, challenges that you are facing. And it was a pleasure to be with you all this time, these 2 hours. Thank you very much for your participation. Temirlan, would you like to say a few words before we call it a day?
Thank you very much, dear colleagues. Thank you very much, Victor, for organizing this event. I would be glad to hear any of your feedback, any questions. The last one webinar, when we had it in Russian, we received very, I would say, quite a lot of questions, which we decided to use as our next tool for communication with you. We're currently planning a certain, I would say, top 10 questions regarding the AIFC and Kazakhstan. So please keep in touch.
Yeah.
Thank you very much.
Yeah, thank you, Temirlan. It was a pleasure to have you on the webinar, and let's keep in touch. Have a nice day, everyone. Yeah. Bye-bye. Bye. Take care.
Bye.